Hello, everyone. It's Casey Miller with Rentec Direct. I'm so excited to be joined here today with Alexander Reeves from Steadily. Steadily is one of our integrated partners for landlord insurance, and it's one of our favorite partners to work with because we always try to find companies that really provide a product that gives our clients true value. Not only our clients, but everyone within the industry. So when we think about ways that we can help landlords, property managers within this space, protecting the actual asset, protecting the actual property is one of the biggest value adds that you can do as a rental property owner, as a property manager helping your landlords, and then us as the software providers providing you with solutions that help protect these properties. So today we have Alexandra from Steadily here today. Thanks for joining us.
Thank you. I'm so excited to be here, Casey. And as Casey said, I lead our brand marketing for Steadily, and I'm just excited to talk about a little bit about insurance and make it as exciting and interesting, hopefully, that everybody can have today.
Yeah, well, we really appreciated that. I was really excited about the response that we received when we were promoting this webinar. There's people who were saying, shoot, I'm not going to be able to attend it live. How can I get access to this? Also, we had our property managers asking, like, can I invite my landlord clients to attend this? So we really want to emphasize that we have information for all, whether you are a rental property owner or a property manager who wants to share this information with your clients. So I just always like to go over some webinar logistics. So a couple of things. This is getting recorded. Everyone who is registered and attending live, you will get access to that recording as it will just get emailed to you automatically. But I also like to take the recording. I edit it a little bit to kind of cut out that dead space. And we put it up on our YouTube so you can always follow along afterwards and then share it. Share it with your client, share it with your fellow investors, share it with anyone who has questions about the difference between landlord insurance versus homeowners insurance. And then we don't have a live chat going on right today, but we do have our questions tab. So if everyone takes a second to kind of look down to the bottom right corner of your screen, you should see a little icon that says questions. If you click on that, that's where you can type in live questions. We're keeping track of them. We have Brittany from Rentec on the back end of the webinar who's going to be responding to you, letting you know that we got the questions, keeping track of them, so then we can ask Alexandra live at the end of this presentation. So, and if you have any other comments, send them in the questions tab also, because we always love getting that feedback. And with that, can you think of anything else I need to touch base on, Alexandra, when we've done these webinars and stuff?
I don't think so. I'm going to take some pauses throughout. And so if you do have a question, please take that opportunity to type it in the chat, and we'll do our best to kind of address things as we go. And just one small caveat, I lead our brand marketing, and I'm going to talk sort of more holistically about insurance, but I am not individually licensed in individual states. So if you want to have a personal conversation about your specific, property or a specific question, I am going to refer you to the link that we'll share a couple different times. So for you to book a meeting with one of our agents to talk about that specific situation.
Excellent. Good advice to get us started. Well, thanks again, Alexandra, and I'd like to officially welcome you to our webinar with Steadily about protecting your rental property and cash flow.
Thanks so much. So just to kind of get us off to a good start, and I can't see everybody, but, raise your hand in your mind, I guess, if you would like to increase your cash flow just by a few $100s a month. That would actually make a really big difference, probably to most real estate investors, especially with long-term rentals, where insurance has gone up and up and up and up year over year. So it is just getting tougher to cash flow when you might have been able to do so a couple of years ago. So I'm going to hopefully give you a couple tips today that really help you think about your insurance maybe a little bit differently to actually increase your cash flow by lowering your expenses on insurance a couple dollars. So and as I kind of already mentioned, this is just sort of a blanket statement, just our caveat that I'm going to talk about insurance more holistically today. And every single carrier, every single insurance company has different rules, regulations, et cetera. And so I'm going to talk beyond just Steadily's information as well. But just keep that in mind that it's a general conversation that we're having today. And a couple things I just want you to take away from this. If there's nothing else that you can remember, it's these three things. So homeowners insurance does not cover rental properties. That's sort of a blanketed word that everybody used to talk about property insurance. But We at Steadily sell landlord insurance, also known as a DP3 policy, short-term rental policies, fix and flip policies. Those are the types of things that that you as a landlord need to have. Making active choices on your coverage and your deductibles, those are things that you should be doing every single year. Just like a real estate investment, a property that you're evaluating for cash flow and you're doing a deal analysis, you need to be doing that on your insurance. And I would say every year, if not every other year, at the very minimum. And then when you're thinking about purchasing a property, you need to be thinking about the actual insurability of that property. So I'm going to give you a couple things to think about here in our time today. So the first tip, as I kind of mentioned, is you have to know what you have. So don't be surprised. I think there's so many headlines around and, kind of negative talk. And I understand, like I'm an investor myself also around property insurance, but it really just comes down to the fact that an insurance policy is a legal document. It's a legal agreement that you have with the insurance company to pay for certain things. And so if you're just assuming your insurance policy is going to cover you, but you haven't necessarily looked at what this is called your declarations page, which is basically a summary of what you have, you should do that today. It's very, very simple. Especially with AI tools that we have, it's, take the 40 to 50 page document that you have, upload it into whatever your AI tool as of choice, and ask it some questions. Ask it some questions to make sure you understand what you have and what you don't have. Obviously, we are here at Steadily as, we've got agents to go over your current policy. That's probably the best thing to do. But at a very minimum, know what your limits are, know what your coverages are, and make sure you're comfortable with those. So the first thing that I feel like everybody, needs to make sure that they have is that they have a landlord insurance policy. So that's also a rental property insurance policy. It is for only tenant occupied policies. If you have a homeowner's policy and you have a tenant there is most likely in the language of that policy an exclusion that it says basically this policy is only for owner occupied properties. So what you need to make sure you have is that your policy is covering a tenant occupied property. If you have a homeowner's policy and you have tenants living there and you have a claim, there will most likely be an adjuster that comes in an investigation of kind of what happened, and they can completely deny the claim. And that does happen, unfortunately, if you have homeowner's insurance when you've got tenants there. So landlord policies are typically a little bit more expensive than a homeowner's policy because it includes things like tenant liability, loss of rental income, those things that are really important to landlords. And so you just want to make sure you've got the right thing. But rental property insurance or landlord insurance can include short-term rental insurance, mid-term rental insurance, fix and rent insurance. Those are all different things. And so you just want to make sure you're upfront and honest with your insurance agent and have the right thing so that when a claim happens, there's no reason for denial. A couple things just with coverages, what people are always like, what coverages do I need? Or I don't want to pay for a bunch of extra coverages. Well, typically, what a landlord insurance policy is going to cover is, the big stuff. So fires, water damage, wind and hail, those types of things from like large weather events. It also covers, like I said, liability, which is really important when you're a landlord, to make sure that, if there's a trip and fall, if there is a loose railing on a stairway and somebody falls down the stairs because maybe a contractor didn't install it correctly, something like that. Those are things that Steadily and landlord insurance companies cover to make sure that if there is a lawsuit, that you have a lawyer that's defending you, they're able to pay out the lawsuit and just deal with the whole thing, basically. And then loss of rental income. So if you have a claim and your tenant has to move out for a certain period of time, if for the floors to be refinished or the drywall to be cut out or whatever the case is, it will actually cover your loss of rent during those moments. And then just a couple additional coverages that you may need or want. I always recommend water backup, which is, again, something you need to just make sure your policy covers. So that is a separate coverage that not all policies include. That is the number one thing we probably pay out on for rental properties. A lot of stuff goes down the toilet. A lot of stuff goes in those pipes. If the water's backing up, that's something that would be covered by landlord insurance. Flood's always separate, and then short-term rental insurance. And then umbrella is just like an additional liability that I just think, like, I can't emphasize enough. Those don't cost very much, and you can get basically an additional like $1 million of liability. So that if anything happens, you are just absolutely covered. I always highly recommend those. Another thing that comes up depending on how you manage your properties is sometimes people house hack, or maybe there's you live in a duplex, you live in one side and maybe part in your basement you're able to rent out or something like that. That you would potentially need 3 types of insurance for. You would need a landlord policy for the unit that you've got a tenant in. You would need, that person would need to buy a renter's insurance policy for their contents of the property that's being occupied. And then you would also need a homeowner's policy for the part that you're occupying. So that's just a conversation you need to have with an agent. I know it sounds like a lot, but that, again, the outcome, if you don't have the right thing, is they can just deny a claim. So I'm gonna make sure you got the right thing. I'm gonna pause there and just see if there's any questions. There are a couple of questions.
I can kind of bring them in. You were kind of answering it from Rachel, who was asking about the owner-occupied properties versus the on-site rental unit in a basement.
Yeah,
so
and Rachel, just to expand on that, that is, I'm making kind of a blanket statement. It really does come down to like how much is under the same roof line and some things. So like you need to talk to an agent exactly about how to have that insured. But I will say that like most of the time you need something more specific. Don't just have a homeowner's policy if you've got tenants there. You need to have a conversation and make sure what the situation is being covered. The other one's about mold. Are there umbrella policies that cover mold? That's becoming way more common in properties that I manage. An umbrella policy covers the liability. So I'm just going to say it could, depending on, mold is a really complicated thing. So I actually like, that's another one you've got to talk to an agent about. But in general, it covers your liability. So if there's an outcome that they're suing you for, or like a medical, situation that they have, it could, but it really depends on the situation. And so that's just something you have to talk to an agent about also.
Yeah, I was curious with that mold question of there's the liability for a medical issue, but then also property damage that could be caused by mold or
the
water damage.
Yeah, mold's a really tricky one. And sometimes there is like additional mold coverage you can get depending on the state you're at or where you're at and those types of things too. So it's something you just need. It's a really specific question that you need to talk to an agent about, but it could be, and it's a very good one because I just think umbrella policies, like not enough people talk about them. It's like, if you're nervous at all about being sued, if you kind of have that anxiety in your head at any given time as a landlord, you should just get an umbrella policy. They're not that expensive, and it really does provide a lot of peace of mind. Cool. I'm going to keep going. So this is just an example, as I was talking about, as real estate investors, we all want to think about things strategically. Like everything about a rental property should be, what's the cost benefit analysis of it? So I think a lot of insurance companies, in their marketing, at least, I'm a marketer, and so I think about like there's a lot of scare tactics, I guess, used in the industry. And, you have to always think about, what am I paying to get that coverage? And so that, what am I, because I'm always paying a more premium to make sure everything is covered under the roof. And so I'll run through a couple scenarios here in a second of what I mean. But the kind of the quick off the cuff things, ways you can reduce costs, which everybody is trying to do, is reviewing your policy annually. And so making sure you've got the right content, like even for a landlord policy, there's a certain amount of coverage for the appliances and things like that. Make sure that's reflected accurately. You're not overpaying for contents that you don't have in the property. I know you get a discount for a property manager. So with our friends at Rentec, I know if you are working with that, make sure you've got that type of discount on your policy. Increasing your deductible if you can afford it. If you're the type of investor that has, a substantial amount of money in a reserves account for something that could happen, and you're comfortable and want to leave that money in, a high yield savings account or whatever you keep it in, you might want to think about just increasing your deductible, because you might have enough money to pay for some of those smaller claims yourself rather than filing a claim. And so those are just some of the things you should think about. New construction almost always has better rates. So as you evaluate purchasing new properties and new construction, just in general, it's, even if you have a totally renovated house, brand new, back to the studs, if you have a new construction house, it's almost always going to get you better insurance rates. So just kind of keep that in mind. And then making sure that you educate yourself on the insurance market before you actually buy a property. So we got a couple tools to help you with that. And we just came out with a ChatGPT app, Steadily did, that can actually help you work in an insurance quote directly through a deal analysis that you're doing through ChatGPT. So it's getting easier and easier to do that just as part of your deal analysis flow. But I'm going to hit on this really quick, and then I'm going to answer a couple of questions. So this is just a scenario to kind of illustrate a higher deductible and like what the savings could be. And this obviously changes, it could be wildly different depending on a lot of different factors. But if you're choosing a deductible that's more in the $5,000 to $10,000 range, let's just say you keep that amount or more in reserves kind of all the time for vacancy and for repairs and for other things, that might result in maybe a $40 a month or a $480 a month savings. So you're saving that. You're basically self-insuring for claims that are smaller than that yourself, and is saying, okay, I'm just going to go ahead and fix the small stuff myself. I'm going to use insurance for the really big stuff, like a tree falling on the house or a toilet backing up and ruining all of the floors, etc. So that's just a way to think about it. And so that might be maybe a more the right approach for maybe somebody who's been investing for a while and is used to keeping those higher reserves. On the other hand, having lower deductibles, $2,500 to $5,000, what you're telling the insurance company when you've got those lower deductibles is that I'm probably going to file claims more often for smaller things. So keep that in your mind when you're making those choices. That's what you're telling them, and so you're essentially paying for that ability to do that. And so, and that might be totally fine. That just might be the way that you want to manage your business, and that's totally fine. But everything is going to be covered. You're going to file smaller, claims for smaller things. So if you don't have as much in reserves, you're investing, you're trying to scale a lot and you don't want to keep that much in reserves, that might be the better option for you. So you are covered in those types of scenarios. So there's no like right or wrong. It's just kind of up to your risk tolerance. But here's where I think it just always makes more sense to pay more, is having really good liability limits. So I just talked about umbrella a couple times. Making sure that you've got lots of rental income coverage, which is included in most of our Steadily policies. So making sure that you've got coverage if somebody has to move out because of a covered claim. Water backup, I said, is one of the most common claims in rental properties, and so make sure you've got that on your policies. And then you always want to make sure that you insure for replacement costs. The alternative is replacing for actual cash value, which is basically the cost of the repair or the cost of the thing that was damaged depreciated. So replacement costs, everybody knows there has been a lot of inflation and things cost more, construction materials cost more. You want to insure for what it costs to replace March 19th of 2026 today. And so there's no right answer. It's just, you need to make sure your agent can show you both ways of how much it costs to have a higher deductible and how much you're paying a month, because it's not all created equal. I'm going to pause there and let's see here. So Ed asks, if you have a short-term rental but use it from time to time personally, would you need both rental and homeowners insurance? So it depends on how much you use it personally. The answer is if you're just using it occasionally, I would just have a short-term rental policy, and that's fine. That's totally fine. If you're using it like half the year, I would actually switch it between homeowners and short-term rental. So again, that's just sort of a conversation that you can have with an agent about how much you're using it. But it takes about 2 minutes for us to switch something back and forth. It's really not a big deal to do it. And so, if it's like a situation like that, just, you can give us a call and we can do it for you. Should a tenant's renter's insurance name the landlord as well as the tenant on liability? Yes. You want to make sure that you are an additional insured on their renter's insurance. And I don't think I have time for today to explain why, but I would highly advise it. I would highly advise it. And I would also highly advise just, having it be mandatory, because it can really save you in a lot of different ways. Are there any umbrella policies that cover, we already talked about all of them. We already talked about all of them. Okay, cool. I think we're up to date. So we'll keep going. Okay, so due diligence isn't just for your purchase price. So as you're thinking about buying a new property, these are just a couple quick tips I would give you, that from an insurance company's perspective, any insurance company's perspective, not just Steadily, these are things that maybe cause some flags with underwriting. So the first one is electrical. And so this is not very common, but it does come up from time to time. So any knob and tube wiring or the presence of a fuse box, those are probably not going to be properties that are able to be insured at all. And so you always want to make sure that electrical is up to code, you've got a circuit breakers are up to code, et cetera. Because there are inspections that happen as part of, properties when we go to do underwriting on the property. And so you just want to make sure you've got those things up to code. Cast iron or galvanized steel pipes, those are also a concern for most insurance companies. If you have an aluminum, tin, or a flat roof that does not have drainage, a lot of flat roofs have drainage, but that's just something you need to make sure and check as part of that inspection process before you buy the property. Solar panels, if they're covering more than 50% of the roof, that's also a concern. Solar panels are also like a separate topic that are a little bit more complicated. And so again, you should talk to an agent about that if you have them or are thinking about putting them on there. The way that they're covered on a policy is a little bit more complicated. And then roof age, 20 years or older. So if it's older, maybe required to replace or exclude it. This is becoming more and more common. And so, and if you've got an older roof and it's fine, it's fine, but it's an older roof, you can also just say, you know what, I'm just going to exclude it from the policy. I don't want to pay for it to be insured anyway, because I know that if something happens and there's a leak that happens or whatever, I'm just going to replace it and fix it myself. So that's another just option that you always have with roof age. But roof age is becoming, it's a really big issue of just being able to insure property. And so that's why I would just, work with a company. We are able to just exclude the roof if that is an issue. And then tree limbs that are touching the roof are dead. That's like a telltale sign. You almost always just need to get those cut before, that'll come back essentially in the inspection that there's a tree that's too close or it's dead and it needs to be taken care of. And then swimming pools, trampolines, hot tubs, they usually need to be enclosed by a 4-foot high fence with a locking capability. It doesn't, for swimming pools, it doesn't necessarily need to be like a true baby fence. It does need to have a fence around, like a big fence around the whole property, the whole area that does have a locking capability so that a neighbor doesn't just go, wander in there and have a party. So
So are you kind of advising that prior to even purchasing a property and doing this like deal analysis that you submit your inspection report or something to an agent to be like, is this property even able to get insured?
Yeah, I think if especially with electrical, if you're buying a house that was maybe like a 1940s and the electrical is bad, I would give us a call, send us an email, you can text us, etc. I would ask some of these things about the house because it's not that it can be insured, but most of the time insurance companies will not enforce coverage until these things are taken care of. Or if you're, it's kind of the last minute and you're trying to get it funded, we could potentially insure it. And then you're going to get a cancellation almost, within a week or two of, after the inspection happens. And so this is just stuff you just need to look for as you're walking a property. And it's stuff that you should probably already be looking for just because, it's going to have maintenance issues, but just to kind of keep in mind.
Yeah, I think that's excellent advice.
Yeah. So this is a tool I kind of mentioned earlier. So if you're thinking about buying a new property, we actually have this is just like a quick quote tool on our website, and you can just scan that QR code. But this is not like a full real quote. This will just spit out a number very quickly to you. If you're like evaluating 20 different properties on any given day, this is a great tool just to use to give you kind of an idea of how much it would cost to insure that property for landlord insurance. Like I just mentioned, we actually just integrated this into ChatGPT. And so this is the same tool that is in a ChatGPT app that you can also use if you're using that already for deal analysis. But it's just a great tool just to give you an idea. And then once you actually, I would say before you're putting an offer in on that, get a real quote from us. But this is just to give you an idea as you're running deal analysis on 20 different properties. I'll pause here. There's a question. So tenant, renters, insurance, and pool. It seems insurance companies will increase the liability to $300K, but it often includes an exclusion for pools. Advice on tenant coverage that includes pools and is reasonable and affordable. So are you, so basically, yeah, I think what you're saying is that you, if they're making you have a higher liability if you have a pool, and then it often excludes the use of a pool. I would say, I mean, we insure properties with pools all the time, so I would definitely get a quote with us if you haven't already. But yeah, we do insure properties with pools, so you might be harder to find, but you can definitely shop it around and try to find one. Tying it all together. So these are just a couple, just to recap basically. So you can lean on us. If you've never heard of Steadily, we've been around since 2020. We are A-rated for customer service. We actually were just named like top customer service in the United States through USA Today. So we are the rental property experts. That's the only thing we focus on. Our company was founded by landlords and by real estate investors that basically got very frustrated with the process of trying to get landlord insurance on some of their properties. And then, that's why we were created. We are an insurtech, so we leverage a lot of technology that a lot of other kind of more, the historic insurance companies don't. And so I would just try to give us a try as far as getting a quote, because the specificity and the amount of money that we invest in technology to really assess the risk for that specific property versus what the sort of legacy carriers do, it's quite different. And so we're here for you. And then all of our agents only work with real estate investors. So if you need a policy in the name of an LLC, that's no problem for us. If you need additional liability limits, no problem for us. We do, Airbnbs, fix and rents, fix and flips, et cetera, short-term rentals, all of the above. And so there are specific policies that we offer for all of those things. So that is it. If you want to get a quote, this is the site. I think we can stick it in the question answer in the chat. Do we already have it in the chat?
And we'll be able to follow up with everyone directly to give you this information. And I wanted to throw out one more comment that Connie had where she was sharing that we find kind of going back to that tenant renters insurance stuff. She was just kind of sharing that they find that additional insured on tenant and landlord policies can be challenging. Insurance companies are fine with additional interest, but getting added as an additional insured seems challenging. Is there any advice? So this might be more on the renters insurance side of it, but just in your experience.
Yeah, on the renters insurance side. Yeah, and so Steadily does not do renters insurance. So we only work with the landlord and the real estate investor. So unfortunately, I can't answer that because that's out of my scope a little bit, but it's a good question. And I would ask the person you've got the renters insurance with or shop that around. I'm not totally sure on that. And then Kimberly asked how do I know if Steadily provides coverage in the city of Detroit? So we are in all 50 states. We are an insurance carrier ourselves. We have our own product. And then we also work with 29 different wholesale carriers. So if there is for some reason we cannot insure it ourselves, if it's a certain area, Florida is a great example. Florida is kind of a more challenging state for us. We actually work with wholesale carriers. So we're able to get you coverage that you wouldn't normally have access to, essentially, because we are kind of that one-stop shop. So we both act as a broker as well as our own insurance carrier. We do both of those things. And so that's how we are able to be in all 50 states. But it's nice because you have one portal with all of your properties, all of your insurance information in one place if you work with us, and you don't have to call around and do a whole bunch of different things.
And I wanted to kind of share a little bit about the process of how the Rentec and Steadily integration works. So since we have a lot of Rentec Direct clients on here, or those of you who are just joining because you wanted to learn more about the landlord insurance process, but within your Rentec Direct account, landlords and real estate investors are able to actually, when they're in the editing a property tab, you'll be able to see when you add the insurance information, there's an opportunity to pull up a quote from Steadily. It will take all of your property details and kind of pre-populate that so you can get a quote, get some information, and then if you were ever to purchase a policy from Steadily, all of that information gets auto-populated into your Rentec account. And that can just be a really easy way to keep track of the insurance and everything, but kind of showing a little bit of why we picked Steadily. It's, very brand aligned with customer service first, just like Rentec picks as a value. And then also that product that's created, by landlords for landlords, just like the history of Rentec with our kind of founding story as well. But can you share a little bit, Alexander, about beyond getting a quote, what is the purchase process like, or the policy shopping process like with Steadily, kind of beyond once you do that initial kind of self-directed?
Yeah, I mean, so depending on, I would say most people will start online and get a quote and put their information through online, which takes honestly 2 minutes. It's way faster than sitting on the phone with probably any other company. But most people do not close just online. Most people want to talk to an agent. So we do have licensed agents that you can form a relationship with, over the phone basically, and then continue to email if you've got more properties or whatever. But it's like Casey said, like you've got everything in the Rentec platform, and everything's kind of there for you. So it's once you get the quote, if you want to have a conversation, you absolutely can have a quick conversation. You can also text with them if you want to. It's very simple. We try to make it as easy and fast as possible. And then we'll just issue the policy. And then Rentec also can make sure that they're, an additional insured if they're managing the property, et cetera. So it's all kind of seamless through the site, which is really nice.
And what would you say is one of the best ways that property managers can help their landlord clients kind of find the best policies, especially for new investors who might not know they even need a landlord insurance policy?
Yeah, I mean, well, obviously we can help shop the policy for you, but I'm obviously represent Steadily, but I just think it's a good idea to always get at least 2 or 3 quotes. And like I said, you should shop it at least every other year because things change a lot. And the other thing is insurance regulation, there's a lot of changing of our rate. Like we actually just lowered our rates in several states. So even if you've gotten a quote before, you might actually be able to requote it now and get a better rate. It just, the insurance market has been really volatile the last couple of years, and we're finally seeing it kind of even off. So there's been a lot of just wild rate increases. And so I just think it's always advisable to recommend it, to your landlords that you manage for them to get a quote. And like I said, it takes about 2 minutes with us. So it's not a big deal, and you don't have to sit on the phone and wait a whole lot. And then Marcus asked if we are doing larger properties. We do up to 4 units ourselves. And so right now, so we don't do larger properties. I know we get asked that quite a bit. I wish we did self-storage. I wish we did a whole bunch of other stuff that we get asked about as well. So it's definitely on the roadmap, on the horizon at some point, but not today, unfortunately.
Oh, I have a question. You said 4 properties. So we own one property that's 2 4-plexes. So would that be considered an 8-plex? They have separate addresses.
Yeah, it's up to 4 units, 1 address. And so, yeah. And so, we have people who own 100 different properties, right. And we can, but as long it's up to 4 units, basically,
per
within
address.
The same address. Yeah.
Okay, that's good.
Sometimes there's some sometimes with duplexes, sometimes we can do more, but it's it just depends on exactly the situation of the property.
That makes sense. And then one of the questions we're getting just a lot internally when we look on forums and stuff like that is coverage for dog bites and pet related injuries. Mm-hmm. And so if you kind of want to clarify anything you can about what liability coverage means, and then maybe specifically for any animal or pet.
That's a good one. So I'm just going to speak again. I'm going to speak really broadly about this because every policy does it could depend, and there could be an exclusion depending on where you're at in your state. But in general, landlord insurance covers liabilities for dog bites for certain breeds. There may be, it may not be, an exclusion for certain breeds. What I would recommend if you have tenants that have dogs, especially if they are the dog breeds that are sometimes a concern, is that you require renter's insurance. Almost always, depending on the renter's insurance will cover the liability for that. So you're basically relying on your tenant's renter's insurance to cover you because you're going to be an additional insured on that renter's insurance policy. that's the cleanest, easiest way for me to explain that make sure that you're covered.
Fully covered. Yeah.
Yeah.
Thank you for that clarification. And then Justin had one more question. If you're saying that is.
Yeah, we don't do mobile home parks, unfortunately. That's not something that we do right now, but maybe in the future.
Yeah, there's always opportunity for growth.
Yeah.
Yeah. And I just wanted to share a story with you because I always like share the praises of landlord insurance with any investors that I talk personally with. But I do have an experience about 5 or 10 years ago. We had a tenant that had caused some violent damage to the property is what it was classified of, ripped ceiling fans off the ceilings, toilets off the walls, punched holes in the walls. And because of our landlord insurance policy, they not only covered the replacement costs for the property, so there's lots of things that got upgraded just because that was what our coverage was there for, but then it was also covering lost rent for, I think, about 6 months. So to anyone who's kind of thinking about what the value of landlord insurance when you're not using it all the time, you never know when these kind of incidents could happen or emergencies happen. So we'll always sing the praises of landlord insurance.
Yeah, thank you for saying that. I'm also an investor myself, and I've also had to use my landlord insurance, and I was real happy about the loss of rental income coverage, because like a water damage claim, I mean, it can take 6 months. Like that policy, it was a big issue we had, but yes, it took about 6 months for us to be able to get a tenant back in the property. So
yeah, definitely. Well, and I like kind of what you're saying too, is there's branches of coverage where they can all kind of cover the different thing. Like make sure you have your landlord insurance policy and make sure your tenants are getting renters insurance and using the tools like in Rentec to be able to ensure compliance with all of these policies, track the policies, whether you're a property manager or a landlord, and then also make sure that everything is covered to the best of its ability. It looks like we have one more question from Mark coming in before we say goodbye. Oh, a couple more. Yeah, get your last questions in before we wrap up.
I'll answer Mark's. Is it true that if you use your insurance benefits, your rate will increase or possibly get canceled? Okay, so Mark, I'm going to answer this in 2 different ways. So it depends on what the claim is. If the claims are what's considered catastrophe claims, so large weather events that are causing more than $100 million in damage in that specific area, those do not typically go against, I'm using this broadly, what's on your clue report. What's called a clue report is what's commonly used. There's a couple different reporting tools that, again, all insurance companies use. So if there's catastrophe claims on there, that doesn't necessarily count against you in any way. Okay. If there are repeated water damage claims on one specific property, that's probably indicating that there is deferred maintenance and there's larger issues at the property that maybe have not been addressed. And so those are where you can get into some trouble with insurability or getting canceled. And again, I'm speaking, more generally. So if there's things that are potentially maintenance issues causing multiple claims, I would say that typically you're not going to get canceled if you have one claim every 5 years. It's 5 years is usually when they the clue reports, things fall off the clue report for the property or for you. So that just kind of those are sort of some general things to kind of keep in mind. But especially in the insurance market as it is right now, things can be dicey with just availability of insurance in certain areas or certain states. And so I do see a lot more investors, raising those coverage limits up to the deductible limits up to 5,000, 10,000, and just filing claims for really big stuff. Roof claims are really, I live in Dallas, Texas. Roof claims are a really big deal here with hail. And there's a lot of bad actors, I would say, in the roofing industry that are saying, oh, just file a claim, and just get a whole brand new roof. I literally hear it all day long. Everybody knows it's happening. And that's where, if you've got multiple roof claims, that's where it can really get dicey, with the situation. So that's probably the answer. A couple more questions. COVID, we didn't know the tenant had a dog that ruined the floors, blinds, chewed the edges of the cabinets. Was that covered by what kind of insurance? That's a tough one. It really depends. It could be. The renter's insurance, you definitely could file it under their renter. If you're an additional insurer on the renter's insurance, that's definitely something. If it's being, if all of that damage is more than your deductible, that's where I would, you could potentially file a claim, as far as like tenant caused damage. I hesitate even answering it because there's so many factors that determine what it is. So I don't actually want to give an answer on tenant caused damage because it could be, but it also may not be for a variety of different reasons. So that's where you kind of have to ask more questions of the agent. The person got evicted because he couldn't pay rent after losing his job. Oh, gotcha. Yeah, that's a tough situation. I'm sorry, May, that happened. It's not a good situation. Cool.
Well, thank you, Alexandra, for all this valuable information. We always love the work that we've done with Steadily and want to continue to see this relationship grow because of all the value that you provide our clients and every landlord and investor in the industry. So thanks again for the good work you're putting out there for all of our rental properties and for joining us today.